Hey YouTube, it's Dimitri, and today I wanted to talk a little bit about the different career paths in finance. This was requested by one of our viewers, and so I figured I'd cover this briefly just to give you guys an idea of kind of where you can work, what you can do. More with a general finance degree. So this channel, I know it focuses on quantitative finance, data science, quantitative analytics, like all these very high-end mathematical things. But I know a lot of people on the quant side are also interested in the finance side and what you can do in finance. And so I'm going to dive on in here and cover the basic areas and path that you would take with the finance degree. And then you can kind of look at this from a quantitative perspective if you would like and see kind of how your skills would fit into these positions. So in finance, most students are going after the money. They're not going after like this great intellectual dive, this great interest. Yeah, it's interesting and they find it great, but it's really about the money for many students in finance. So the typical jobs that these different finance students want is you want to work in A, hedge funds, and B, private equity. So the typical path for this is you get an undergrad finance degree, you try to get in and work somewhere as a financial analyst at an investment bank for 2 years, and then you go back and get an MBA. Then you come back and do 2 years as an associate at an investment bank, and then at that point, you springboard off into either private equity or into hedge funds. This is important because a lot of people don't realize this. Investment banking is a really weird realm. It makes pretty good money, and a lot of people go into it for the money, but it's usually a springboard for finance students into other programs. It sounds really easy, right? You get the degree, you do 2 years as an analyst, you do the MBA, you do 2 years as an associate, and then you springboard off into these other careers and you make even more money. Sounds great. The problem is that these programs are essentially driven by, I don't know how to put this, but it's elitism. Like, these programs aren't actually hiring like students from like my undergrad, like Washington State University and like other state schools. They're hiring students from like target schools. So think like Columbia, think like University of Chicago, NYU, Carnegie Mellon. Like they're looking for like these target schools that are like the top elite business schools. They're not going out to like general programs and getting general students, even though they're either qualified or even more qualified. They don't care. It's a game of more or less the prestige. And yes, you can break into the industry. It's very hard, but you can break into investment banking without an Ivy League or a target school on your resume, but it makes it much more difficult. Okay, so just to start off with, if you have to go into investment banking, like what is investment banking? What does it do? Investment banking has a lot of different parts and components, which I don't think a lot of students realize. Different parts of investment banking are like mergers and acquisitions, like troubled debt restructures, raising capital, doing underwriting for these big corporations. But essentially investment banks, in like a nutshell, is they do transactions with large corporations and government agencies, and they will take a lot of data. So they have like, say, two companies are looking to merge, or there's going to be a company buyout, one company's going to buy another company. They go in, they get all the data, the financials, they do the analytics, they figure out exactly, what this company is worth, what they think it is worth, and they try to use that as an intermediary to actually make the transaction happen. So they work between the two companies to make a deal so that one company can buy another one. If you have troubled debt restructure, for example, you have a company that's essentially going bankrupt, or it has a bunch of bad assets, it's trying to liquidate, and it will try to either restructure its deal. So think like Chapter 11 for restructuring. When you do bankruptcy Chapter 11, you restructure, you have to figure out how to renegotiate all this debt. Investment banks specialize in doing that. So anyway, so you get into investment banking and you learn all these transactions. It's mainly Excel focused. You build a lot of pitch books. So for example, you have like an idea of like someone you want to buy, or you have to help, pitch the idea to another company. When you do this, you have to do Excel, PowerPoint, you build these pitch books. It takes a lot of hours. You work a lot of hours, and that's why I think a lot of companies like hiring investment bankers, is because investment bankers have all this training and skills, and they've weeded out a lot of the people that don't want to work a lot of hours. So now that being said, right, a lot of people are trying to go into private equity. What is private equity? Private equity is where rich private individuals are looking to invest in small companies. So say you have a small company, you're doing a startup, you need to raise capital to finance this business. Private equity does that. They come in, they say, okay, you need $6 million to run this business and do the startup, and then they go out and they find these private individuals that are wealthy, they're looking to make more return on a riskier investment, and they go in and do these private equity funds. And then private equity firms actually are kind of organizing both the companies they represent, how much capital they need, putting financials together, as well as actually investing themselves and then finding clients. So if you're a wealthy client, you want to invest in one of these companies, private equity kind of meets you guys together and makes these transactions happen. And there's a great video on investment banking and why two guys left investment banking, and I just watched it and I think I would like to make a little correction to this. I'm going to put a link below because in general the video is really, really good. I think it's a great perspective for someone who has experience in investment banking. Two different guys, they end up going into tech, so something a little different than your usual route. But one thing they talk about is like when you go into private equity and hedge funds, you know, oh, like you'll start out making $500,000. They mention that, right? It's not true. It's very, very rare. And I'm going to put another just link in the description below from Wall Street Oasis, which I believe has more of a comprehensive analysis in putting this data together. But essentially they show you like your first year analyst, your expected compensation, bonus, and your salary is $102,000. Second year analyst $140,000. Third year analyst is $146,000. First year associates $200,000, and then third year plus associates $245,000. And then it ends up going on to like a vice president can make, you know, $341,000. But I think it's important to note that getting into private equity is very difficult. So they take all these people that go into investment banking, but those have been narrowed down from all these people that go from, you know, like your undergrad only takes the target schools, the top of the top, and it like narrows them out and weeds them out to private equity. But I think the key here is like a vice president takes years to get to, and they're going to be making $341,000, which is a lot of money. But the issue is you're not going to be making $500,000 coming out of the gate, at least not on average. The second route is similar to private equity, it's hedge funds. Hedge funds are essentially low regulated investment groups that do investing. The strategies are typically very high risk, and there's a lot of regulations around. I believe to invest in a hedge fund you have to have $100,000 in assets excluding your house. So to actually invest in hedge funds is very risky. It can have high returns, and so it's a competitive environment, and the lack of regulation makes them lucrative to many wealthy investors. Hedge funds again are looking for investment strategies, so typically high leverage. They borrow a bunch of money and then they make an investment, and that leverages your returns. You have high returns, life is good. It's very common for hedge funds to blow up. So again, you would go back through this process, you know, of your undergrad, 2 years experience, then you go into your MBA, then you have 2 more years of experience from an investment bank, and then you end up springboarding off into hedge funds. So again, from Wall Street Oasis, I'll put another link below so you can see it's not $500,000 like these people are trying to convince you. The finance world in general kind of blows up the numbers and makes it seem larger than it is. But the average compensation for a hedge fund analyst is $152,000. That being the base salary is typically around $98,000, and the average bonus being around $54,000. So these are the most common routes. Like people are trying to get into private equity and hedge funds for the money. The analytics side I'm just going to ignore for now. We're not even going to talk about the types of analytics, if it's even analytical, and the different types of funds, because yes, there are different types. There are very quantitative funds and there are very business kind of theory driven funds. So another route you can take if you don't want to go through this super competitive process, going to like special schools and everything, is going to wealth management. So wealth management in a basic definition here is just taking older people who are going to be retiring, or even younger people who are planning for retirement. They have money or assets they would like to manage. Again, these are not looking for high risk, high reward situations like a hedge fund, because wealth management is highly regulated, and it's just going to be something where it's like you can manage your money and you make a consistent return over time, and it's very conservative. So I've just Googled it. You guys can Google it as well. I'll try to put a link below if not, but a lot of things are saying like a wealth management specialist salary is $78,719, with this range being between $63,805 and $93,158 as of March 29th, 2018. Other sites are posting, for example, like Glassdoor shows that a wealth manager at Merrill Lynch is $64,165 per year. So again, you can see the salaries are hugely different between investment banking, private equity, hedge funds, and wealth management. Wealth management is a good area to go. It's a little more relaxed. And I'm going to cover in the end of this a little more the differences and pros and cons between some of the jobs. But wealth management doesn't make as much money, but there are lots and lots of companies that do wealth management. So the vast majority of people in finance end up going to jobs that are not in investment banking, that are not in private equity, and that are not in hedge funds. All right, so now that we've covered those, the other routes for finance and a finance degree in general is corporate finance. So corporate finance is just planning around assets, management, budgeting. You can also work on the accounting side of this if you have like an accounting degree, or like your finance degree is focused in accounting, or you want to be a CPA. Corporate finance in general general, just planning like the budget. So where is money going to be spent? What is the return on assets? So we're going to make an investment as a corporation. How much money are we going to make on this? How much risk is involved? It's a lot of these different kind of like general finance theories that you learn in your finance classes in undergrad. There are also other opportunities which I think people don't realize. Like a finance degree is good because it's fairly analytical for a business degree. Other suggested kind of opportunities are like sales and business development. So big corporations are building like new product lines, or doing sales, they have client-facing roles. Typically people in business degrees are great for these positions because they're good at talking to people and they like to be working in groups. Another option is startups. So finance people are good at this because you have an understanding of how a business works. You understand, how money is made, how capital is raised, you understand some basic accounting. And so a lot of different people in finance now, in like the millennial age, they're going out and doing startup companies. And this kind of leads me into another opportunity, which is tech. So yeah, you don't really have the tech skills. You're not going to go out there and be like a programmer or a coder, but you can actually go into the tech industry, guys. So even if you work in finance, or like budgeting and planning and treasury and business analytics, right, you can still go into like the tech industry and do analytics for the tech side, or you can do analytics for the manufacturing industries. So these jobs, though they seem similar, the work environments will be very different, but it'll be something very unique and different than going into like investment banking and the typical Wall Street route. And then two other different careers that you can do is, one, you can work for the government. So there's economic positions. So positions that look at, financial planning and budgeting for the government. You can do economic planning. You can work for different agencies that collect data. It's all financial and economic data. You have a background, you'd be able to actually analyze the data and put together reports and do some research for these different organizations that are looking to figure out how they're going to spend their budgets as an agency. And then the last one, which I think is huge and booming right now, especially on the MBA side, is consulting. So I think about maybe 10, 15 years ago, Wall Street was like this big king of MBAs. You'd get, your 2 years as an analyst, you go and get an MBA, and then after your MBA, you'd go into investment banking, and that was the highest paying field. So I went to University of Michigan. Ross, their business school, posts all this information about, the careers, how much students are getting paid and all that. And the surprising fact is I think the entire industry is shifting. A lot of these MBA students do not want to go back into Wall Street anymore. They're not going this traditional route. They're not going into investment banking. The biggest industry now is consulting. So you can do consulting, and consulting is more or less like you're getting hired out to other companies to look at their data, to analyze their financials, to help on special projects, do maybe some risk management, do some model governance. Like you can get in there and do other activities in a consulting firm. You travel a lot and you learn a lot more about different businesses because you get a little bit of like a project at this company and a project at this company. And so a lot more of these MBAs are making actually more money working in consulting and in technology, as we mentioned before. Now to do a little bit of contrasting here and to think about this as like a big picture. A lot of people say, Dimitri, I want to go into investment banking, I want to do private equity, I want to do hedge funds, all the money, it's great, it's wonderful. But as the video shows, which again, it's in the link below, the video on why these two guys left investment banking is a lot of people are essentially just burnt out and they don't like working all these hours, and a lot of it's all politically driven. So I'm hoping you guys watch that video and get a little bit of flavor from their perspective. But investment banking is heavily politically driven. You're grinding out Excel sheets day in, day out. You could be working, 60, 70, 80 hours a week. And yet, yeah, you're making a lot of money. You might be living in a city that's very expensive. And then you're working all these hours. You don't have a lot of free time. So yeah, you have a lot of money, but it costs a lot to live there. And so there is like a downside kind of trade-off in there. If you love to work a lot of hours, you love finance, and you like kind of like the financial analytical side and how this works and how businesses are put together, I think investment banking is a great opportunity. But you have to realize you are sacrificing vacation, PTO, a lot of freedom and flexibility to learn and do your own projects on the side. On the flip side, so if you do corporate finance, you do wealth management, these jobs are more stable. So in investment banking and hedge funds, there's a high probability that you'll work a year or two and then they'll just get rid of you because you aren't in the top 80% of people, and they cut that bottom 10 to 20%. This is common in investment banking. Hedge funds blow up all the time. So you might be working at a hedge fund making 350, it's awesome being an analyst, and then all of a sudden you're fired, the hedge fund blows up, files bankruptcy, and now you're out of a job. So it's risky, but you make a lot of money. So it's high risk, high reward, kind of like an investment. On the flip side though, if you work in other areas, so you end up working like in risk management, which is what I do, though you need a little bit more than a finance degree. You would need a master's in like statistics or machine learning or even financial engineering, something along those lines, you make still pretty good money, not as good as the other side of the equation here, but you still make good money, but you get time off, you get PTO, so you can take off your vacations, you can use your money, you can live a good life. Corporate finance is another great option, as long as wealth management, technology, consulting. So start looking at the benefits in these as well. So just because you're getting paid a lot, you need to consider your benefits. Like, do you get paid vacation? If so, how much do you get? Can you actually use these days? So some industries will tell you like, oh, we give 10, 15 days of time off, but then you're not able to actually use them. So those are also other things to consider. So I hope this video gives you guys a little bit of clarity on how, like, just because you have a finance degree, you don't have to go into investment banking, you don't have to go into wealth management. There's other opportunities besides corporate finance. You can do startups, you can do tech, you can do consulting. So I would encourage you guys to figure out what you really like to do and then figure out how to apply your financial skills to those situations. Or if you love an industry, like you just obsessed with technology and it's great, go work in a corporate finance position or like budgeting and planning at a tech company, because you'll get to learn a lot about the tech industry and it gives you opportunities to kind of move around as well. But that's kind of my opinion on how you get places. It's kind of the basic path to these different industries. Again, like wealth management, corporate finance, you don't need to go the route of, say, getting 2 years as an analyst and then doing an MBA and then doing 2 years as an associate. That route takes a lot longer, it's a lot more work. Doing corporate finance, again, it's more stable, it's more like family friendly, you get more personal time, the work-life balance is better. But again, it's that trade-off you need to consider of how much money do you want to make and what are your benefits worth and what is your time worth, and do you enjoy things besides just building pitch books and doing Excel work. Anyways, that's my overview of the finance industry as a whole. There are lots and lots and lots of options out there. I would encourage you guys to explore them, look at startups, look at consulting, look at technology as well, which I think goes undiscovered by many finance students. But anyways, thanks for watching. Don't forget to like, share, and subscribe. And as always, until next time.